Hello, everyone, and welcome. As you know, the world of legal is always changing, it's evolving, and this can actually have a direct impact on your role, your team, your organization as we enter this new era of needing to do more with less. So, from the emerging role and necessity of the legal operations to a big uptick in the M&A sector throughout 2023, there's a lot to unpack. So, I think that's why you're all here today. And we're really excited to get started and talk about it. I'm Mary. I'm the Associate Manager of Growth Marketing at LinkSquares, and I'm super excited to be joined by Vanessa Saffold and Haley Altman. I'll pass it off to you, Vanessa, to introduce yourself, and then Haley, if you'd like to do the same.
Right. Sure. Thanks, Mary. I'm Vanessa Sapfold. I'm the legal operations manager at LiveBring Inc. And I have been involved with legal operations for about the past 9 years. My experience is also diverse with a background in due diligence for business transactions, corporate development, intellectual property, contracts, and the like. And I'm happy to be here today.
Awesome. Thank you. We're happy to have you.
I'm Haley Altman. I'm a strategic advisor from Latera, and I've actually kind of been a part of the M&A process from all sides. As an M&A attorney, practiced for over 10 years, was a partner, and led both buy side and sell side transactions as a practicing attorney. I left practice to create a technology company to help more effectively manage transactions called Doxley. Sold Doxley in 2019 to Latera, where I ended up taking over as the head of M&A for Latera and led them through 10 acquisitions in 18 months, coming up with our strategy, talking to the founders, and leading the team through the entire process. So I've done it from the lawyer side, the sell side, and then more actively on the buy side for the past couple of years. So now I'm a strategic advisor on M&A and product matters for Latera.
Thank you both. So, just to set the stage of really what we're going to be talking about today, we'll walk through some different tips and tricks from Haley to navigate those M&A transactions that she was just speaking of, and talk to Vanessa really about all things legal operations and how she's kind of carved out a role for herself, and what she sees to come for legal operations. And then we'll hop into Q&A as well. So, Haley, I know M&A has been a topic that's kind of been on the mind of a lot of people. Just to set the stage here, as we look back at 2022, what do you find to be really the main difference 2022 or even prior versus this year?
Yeah. I think you saw in 2021 into 2022 a huge amount of M&A at really high valuations. So the market was really going through this influx. The valuations on financing rounds were starting to get higher and the M&A valuations. So there were a lot of strategic opportunities to kind of go in and, kind of win over businesses that would be really critical to the go forward for a company. As there was a little bit of a downturn, we started to see the financing valuation start to go lower. So it became harder for different companies to continue funding themselves through traditional venture capital and private equity means, or to do so at valuations that they thought were more appropriate. So then people were starting to look at exits, and I've started to see exit valuations also go down as well. So now, kind of buyers are in a great position where we've been spending a lot of money at high valuations to buy things that were really strategic for us. There's now a lot more opportunity to kind of have a little bit of a market reset and enable companies to get those strategic fits in to the business. Now, financing is also hard to obtain. So buyers, while they have a lot of want to be active in the market and the valuations are a little bit more favorable to the buy side, getting the debt financing in place in order to do it is a bit of a challenge. So the market's been in a little bit of flux where in early Q1, you weren't seeing as high of a volume of M&A. And now I think you're starting to see the M&A market pick up a bit. And people start to kind of get excited about doing those acquisitions. But anytime like the funding market starts to shrink a little bit or valuations get a little bit tougher in the venture capital, you'll see people looking for exit opportunities. How do I kind of make it where if I'm going to have to take a valuation that isn't where I want to go from a financing perspective, I need to kind of take the business to the next level. And so they're starting to look at M&A as an exit opportunity. So there's a lot to think about in terms of how do you kind of go forward? What are those key things that you should be thinking of, particularly, with respect to the valuations as well.
Yeah, that brings me to my next point, actually. These companies that are super excited about this potential, what are some tips and tricks for them as they start to think about an M&A?
Yeah, and I'll look at this from kind of both the buy side and the sell side. So if you think of the sellers first, whenever you kind of get into the idea that an exit is possible or that is something that you're looking to from a strategic perspective or for to take the company to the next step, you really need to think about what are your goals. So sometimes the goals are purely financial, and that's absolutely fine. Like you're looking at the value, you've built the company to a certain level, you realize that to kind of take the next step from a revenue perspective, you need to combine with a strategic, or there's opportunities to look to the PE market to do kind of a majority buyout. If you're looking for that, like you have to understand the reason. So, what is it that you're looking for? What is the base level of things that you need to get in order for a deal to make sense? And so, you need to talk with your board about what is the type of thing that the board would be willing to approve. So, what are those like base level financial metrics that are important for an acquisition to be interesting? But it's not really just the financial pieces that are going to be important to the executive team and the go forward team. So, what are you really hoping to get out of it? A lot of times you're looking for a strategic acquirer, and that strategic acquirer can either help your product fit into a bigger workflow, which would give an opportunity to sell more. Sometimes a strategic acquirer will let you, kind of fit into this larger landscape. And so the market becomes bigger, or it's your biggest competitor, and combining the 2 products together has an ability to really kind of take on the market. So there's a lot of different things that you have to consider about what are the goals that you're trying to get out of an acquisition. I think that'll give you insight as to who the potential acquirers are that you should be talking to. Because do you want a strategic? Do you want a PE? So, like, based on what your goals are in any sort of acquisition, I think that's something that you have to know. Then you also, as an executive leader, you need to know, do you want to go with the transaction? Do you want to stay with the go forward company, or have you been in the business for the past 20 years and you would like to retire on the acquisition? Are there certain important things that you want to think about what happens to your product? So really key things that you should think of outside of just pure financial metrics that go into what will make an acquisition make sense. And sometimes you're going to be approached. And if you're approached and it comes out of nowhere and the buyer is coming to you, you have to then decide and evaluate, okay, now this is exciting. I've gotten some offers, I've gotten some interest. Is this the right time? And what about an acquisition will shift us from being in this kind of headed down a certain path of growth independently to make it enticing or interesting for the company and the employees in order to kind of go forward. So it's really about the key part is building out those strategic objectives. Like, what would a successful acquisition look like to you so that you can start to go into diligence and any discussions, understanding that. When you think about it from the buy side, it's kind of a similar kind of strategy. What are you looking for? I know as a buyer of, a number of companies over an 18-month period, we really looked at like kind of 3 key things. What were things that we knew that we needed to build, but that in order to actually take advantage of the market opportunity, we couldn't build it fast enough. And so we needed to kind of acquire that missing piece. And so we looked at all those opportunities. We looked at opportunities to expand an existing workflow that we had in order to capture a greater market share. If we could provide A plus B, we would actually grab a much larger part of the market than we could have done with our product A, and they could do with their product B as separate entities. And then the third situation we would look at is where those new markets we wanted to enter into that we weren't in yet. And so we wanted to look at the best in class technologies in those areas. And so we sat down and had a strategic vision as to what were going to be our opportunities for growth. And then we looked at the best companies in those areas and we would approach them and we would build out our strategic objectives then for each specific acquisition, like what needed to be true. And we had our own pre-deal scorecard that we evaluated every single company that we considered buying against. And so that would be ARR numbers, net retention was important to us, growth rate, location, Was it a on-prem or cloud? Because the legal industry still has a number of technologies that are on-prem, and so we had a specific goal of a cloud mix versus on-prem. We had specific goals around how the subscriptions were, and so we set out those key metrics. And as a buyer, that gave us the ability to look back over across all of our acquisitions and
Mhm.
see which metrics actually led to the greatest success for us. So if we kind of were like, if we always focused on net retention, if the net retention numbers were higher, did that lead to better outcomes? And so then we could refine our goals from there. So from a buy side, we came at it as a serial acquirer with a much more focused plan as to what we were looking for and what we expected out of the acquisitions, as well as an annual, more strategic plan around what we were trying to accomplish.
Great. Thank you. So it sounds like there's a lot of steps, a lot of parts. Who are those people who should be involved in those conversations, really from maybe the beginning and then maybe who comes in at different points? Is it legal? Is it finance? Who are those people that you would go to?
Yeah, I think it also kind of depends at the stage of the transaction and which side you're on. So, you typically in M&A, either buy side or sell side, you kind of want to keep the initial circle small. So you're going to have on the buy side, you've got your head of corp dev that's really thinking through like what's the strategy or acquisitions. If you aren't a serial acquirer where you have a corp dev person, it's usually the CEO that's really
Mhm.
thinking through like what are those things that are going to take us to the next stage from an acquisition perspective. But that person's going to think through what are those opportunities. We'll typically work pretty closely with the chief product officer to think about, because at the end of the day, you could either buy it or you could build it, and you
Mhm.
have to make that decision. So if the chief product officer doesn't have a sense or understanding of what's going to go on, you're really kind of, you could be building and buying at the same time, and then you're working at cross purposes and resources aren't being deployed properly. But in any sort of acquisition, finance and legal need to be involved really early on, because if you don't spot some of those issues that are going to cause problems from like a legal structure perspective, or you don't know how you're going to finance the deal on the buy side, if you don't have those pieces in place and those people up to speed with what's going on, you will hit those hurdles that will make a deal be delayed, or you'll incur a huge amount more of legal fees because you need to restructure it once legal gets into it's like, you know what? We can't do this because of X, Y, or Z that we already have in place. So it's good to have those people involved as you progress on in the buy side. If you're buying a SaaS company and you're going to need your chief technology officer to take a look at the technology and security review, because any sort of code that needs to integrate into your code base, you need to know, is it written in a code that can go forward, that you're not going to incur additional costs to revamp the code or rebuild or things like that, or if it's critical that this item integrate into your stack, you need to understand if that's possible. So those are some of the core people around like diligence that need to be involved from the start. On the company side, on the seller side, it really depends on how big the team is. Like the bigger the team, the more people that probably will play a role in terms of understanding the diligence. Smaller teams, if you're under probably 50, you can get away with just a few of the executives that can be a part of it, because it really becomes who has access to the information. So a diligence room needs to be populated, like that data room with all of the information. Where are the customer contracts? Where's the architecture diagrams? What are all the financial information? So in order to get that information together, you potentially need more people. So on the sell side, you're going to have the CEO, the CFO, legal. You'll need your technology person involved, and you may need someone from the sales side to get all, like your chief revenue officer, to be able to kind of map out the sales process, the customer relationships, get access to the customer contract database. But the reason you want to keep it to key stakeholders is one, um, the more people that know, the more opportunity there is for information about the deal to get out and for people to start to get concerned. Like if I'm on the sell side and I'm an employee and I find out that we're about to be sold, what does that implicate to my job? Like, do I need to start being worried? And then the information starts to get out. And if you don't go through with the deal, now you've got a lot of people that are worried, like, okay, maybe this deal didn't work, but who else are you going to do this again? And so you the more people that know, the more concern that can get out there that you would want to address more cohesively once the deal's done. Just getting into an LOI or a term sheet with a buyer does not mean that a deal is going to close. There's a lot of steps that happen in a transaction. The diligence process is pretty lengthy depending on how big the company is and how long it's been in business and how many customers it has. And so, like, the more people that know, the more opportunity it is that it leaks to the public, which can have an
Mhm.
impact on the deal itself. And anytime a deal doesn't go all the way through, there can just be disappointment on either side. And you really kind of want to keep all of that contained to the people that need to know. When you get closer to the end of a deal, you will need to bring in marketing. And I think that's one of the things that some people kind of miss a little bit as you kind of want to keep it all the way. Marketing is the one that, you definitely don't want, like, marketing is like used to sharing information. And so
Mhm.
you need to bring them in though closer to the end in order to make sure you've got your press releases timed out. You've got like messaging that's going to resonate with customers because before you close, you're going to call key customers. So as you move closer to closing, as certainty around closing is really obtained, you're going to need to widen the circle to some of those key employees that you're going to need to stay with the company post transition. So the seller is going to need to bring more and more people in. Buyer is going to want to get all of its integration efforts like kind of spun up. So the closer you get, the more people you're going to start to bring in. But that initial kind of part of the deal really needs to be to those critical people that can both have access to the information and who are needed to interpret the information on the buy side.
Yeah, definitely. You were talking about SaaS companies and then bring the tech team into these conversations. In terms of products, what kind of considerations would you take into account for the go forward product, or what kind of effect that would have on your customers or your company as a whole?
Yeah. I mean, it's one of the biggest things that you have to consider. I mean, you're buying a company because the product has value. A lot of times we're looking for best in class technologies that we can bring into the fold. And so making sure that this can be really successful going forward, it's really important to understand what the product does, what's super valuable about it to customers. Like, I think one of the things that you kind of have to understand as you're starting in, and this is where the key stakeholders come into it, is that there's going to be a lot of like kind of change management. So you really need to understand like what your strategic objectives are. So sometimes we buy a product because it fits into the larger workflow. So there needs to be immediate thoughts to what does integration look like? And so you're going to need to have the product people on your side for the product that it integrates with, as well as the product people on the other side to think through like what would be valuable. So, what do customers really like? What data do they wish they had access to? And so then you can start thinking about what an integration looks like and you can hit the ground running with that. Sometimes it's a consolidation play where you have two competitive products. And at the end of the day, one product is going to be the go forward. And you really need to, during the diligence process, start to evaluate like, what is it that makes this product so successful? What is it that customers really like? You need to hear from that product team. What is it that get customers excited? What are their key features that are the most heavily used? And then you need to do the same on your side. And you're gonna in a consolidation play, you need to spend a lot of time talking to the customers to understand like what is the like kind of key technology and whatever the go forward product is, because in some instances it's the bought product that's going to be the go forward. In some instances, it's the person that is doing the buying that their product is going to go forward, but you need to bring in key features from the other products. So you'll really need to like map out and understand like what your strategic goals are. That's why that initial part of what are you trying to get out of this acquisition is so important to understand. And you should leave every acquisition with a strategic plan of what you're going to do. And maybe that plan is to spend 90 days with both products and customers of both products to decide what is the
Mhm.
integration plan if it's a workflow integration, or
Yep.
what is the consolidation play. How do we make that decision of what's our go forward product and how are we going to bring the combo together into the market? Because otherwise, if you don't have a plan and you can't communicate to customers on day one, like what you're going to be doing, they're
Right.
going to start to get antsy on each side.
Yep. Yep. That makes
I have
sense.
a question, Haley. And this relates to the importance of HR and employee retention when you're talking about a M&A deal.
Yeah. So, I mean, when you're looking at any sort of M&A deal, like, the reason that a product is really successful, the reason that this company is really exciting from a strategic perspective is not just the technology itself. It's actually the people that built it, the way that they've crafted the messaging to the market, the way that they've talked to customers and understood what they need. So when you're buying a company, the technology is just one piece of what you're looking at. You have to understand who those key people are. And, typically, um, sometimes people will send you an org chart and they'll be like, here are all our executives. And they're like, those are all of our key people. And you're like, that is amazing. And I absolutely believe those are really key people. But who, if I don't bring this person on, or if this person leaves when they find out that the deal happens, what breaks? Like, if this person isn't here, what breaks? And that could be that your chief security officer or the person that does all of your security questionnaires. There's one person that does it. They know all of the answers. No one else knows it. There's like this, like all the information is siloed in this one person. And if that person isn't there, you will ruin sales cycles. You will delay sales cycles for an extended period of time. Or you have this very specific engineer that knows all of the natural language processing that is one component of a much bigger product. But if you don't have that component, if you don't have that person, you're going to have, a big thing. Or this customer success person like truly understands the customer journey. And it may be an individual contributor, it may be a director, you don't know what level they are. And until you start asking the questions, like we do an exercise where we make people sit down and go through the entire org chart person by person. And we've done this. Now, you can't do this probably in an org of like 10,000 people, but in an org of like 200, you can. You can go through it. Now, you may take on specific segments and say, okay, I need to go through this segment. This is an area we know is really critical to us, but to the best of your ability, understanding who those key people are and then trying to understand what motivates them. In some instances, we'll put together retention packages and we'll be ready with those on the day that those people find out. So we always identify who has to find out before the announcement is made to the public at large. Like, who needs to know? Like, they need to feel like they're brought along. Some people want to be part of the process. And so if you bring them into the process and have some sort of retention thing, they're going to be more likely to stay. Maybe this person's been looking for a promotion. And so telling them about the benefits of being in a larger org is going to really get them excited. So a lot of it is really not only you have to identify those key people that keeps the lights on and the trains moving. And then you also need to identify what it is that motivates them so that you can keep them in the business.
Yeah, that makes sense. Let's talk contracts. What does the contract review process really look like when you are taking two companies potentially merging, or you're looking to acquire a company, or you're going to be acquired? What is that contract review process like?
I mean, the diligence process in any deal is like one of the biggest parts of the process. You need to, because the contracts all have values and that rolls up to your financial numbers. And so if you're buying something that you say you're for, X dollars because it has Y amount of ARR, you need to know that the contracts actually roll up to the numbers that they say that they will. But you also need to understand what those contracts are. Because if you think you're buying a bunch of ARR and everything is like monthly contracts and you don't know that, like that changes the character of what you're buying. So you need to understand like how the contracts work, what are the provisions in them. And you need to understand that from the diligence perspective of what are my risks? Like, so what are the risks I have? And so a lot of times, like doing this with like a data room that can really house the information that gives you your team the key people to be able to go in, including your legal team. It's like, so what were the change of control provisions and things like that? And so you'd have technology that would look at those clauses. But then there's other technology that actually looks at the contracts as a whole, which will really help you from an integration perspective. So I need to know the exact value of every contract. I need to know the renewal dates. I need to know ongoing payment obligations. There's all these things I need to know. in order to actually integrate the business. So there's diligence review and then there's ongoing integration. And the contracts play a huge role in both pieces. But if you can't move, the one thing that will really help you is if you can leverage technology to understand the values in your contracts so that you can move that information into Salesforce or whatever repository you have to manage ongoing work. That also becomes super, super important.
Yeah, absolutely. And with that technology, and I think Vanessa, you probably have some information on this too. In terms of change management, how do you get everyone to start using that technology? It's starting to play such a huge role in our day-to-day lives across all facets of the business. So, what does change management look like in terms of getting everybody up to speed and starting to use that technology?
Well, I think the first thing you need to do is get them involved as soon as possible so that they know what's coming. Because the one of the biggest mistakes that companies make is, perhaps IT and the person that is implementing the technology are having discussions and looking at the various technologies, but they're not having the discussions with the people who are actually using the technology. So, it can sometimes happen that they've already decided what the technology is when they haven't done, first of all, their due diligence in talking to the people who are actually going to use it and looking at exactly what they think they need. Because you can say, oh well, for a CLM, for example, you can say what you think the users might need, but if you're not using it on a day-to-day basis, then you
Mhm.
can miss out on some really key information in helping you to select the right technology. So I'd say the first thing is to get people involved early so that you can get their buy-in, give them something to anticipate. And then also, once you do get the technology and you've implemented the technology, that you involve them along the way and you have training so
Mhm.
that they can not only have the buy-in, but feel comfortable using the technology. And that's where you'll have the good adoption of the technology and use over the long term is when, because now they consider it theirs, right? If it's something that you say, oh, we have this, now you can use it, then it's like, well, what else? Are you gonna like, how is it gonna make my life easier? Am I going to be more efficient? Is it
Mhm.
going to change? What about the process? And so if you involve them early and get their buy-in, I think you'll have a successful implementation of technology.
Awesome.
Well, I think to Vanessa's point, one of the other things it's like if you start to use technology around like contracts and understanding what's in your contracts, earlier on the sell side, when you go into any sort of acquisition, you'll be much more prepared to share information that's going to be valuable to the buyer, that's going to help them be able to get through diligence quicker. And time kills all deals. And that's where technology can really play a role. And if you've already built technology into your processes and you use it on the day to day, then extracting all that information that people are going to want to review during diligence because it specifically relates to those things is going to be a lot smoother and it's going to enable the process of the acquisition to work more smoothly. And then it's actually going to make the process of integration more successful. And so like not being afraid to like kind of bring that technology in earlier before you're even looking to sell will enable you to have a more successful process. When I sold my company, Doxley, we used our data room to put every one of our contracts in. So the day we signed the LOI, we turned on the data room. We closed, and we were a small company, so this is not going to work for everyone. But we did our entire deal from LOI to closing in 10 days. And it was because we had everything all set up. So everything was there. It was organized. It was easy for people to review. So they could ask really targeted questions and we could then add additional information in. So we didn't go through all of these cycles of someone reviewing a set of documents, realizing they didn't have the information they needed and it was in a different bucket. Now you got to get a different set of people to upload that information and like walk you through what's in there. And so like without using technology early or using technology during the M&A process, you end up adding so many cycles. And then every cycle is more legal fees, more accounting fees, more lost time that keeps you focusing on your business.
Yeah, and I can say the same thing with funding rounds because I was involved doing the due diligence. We were involved in several funding rounds, and having the data room always ready helped because it prevented a project, right? To find out what was in the contract. So it's kind of like if you're ready, you don't have to get ready. And so I would co-sign on that definitely because it's better for the deal when the people who are involved know what they're talking about or can find the information. Because if they have to look for it, then now the time is clicking, ticking, and you really need to find the information.
Yeah, absolutely. Thank you. So I know we've talked about kind of the heavy stuff as it relates to M&A. But what are the perks or like the exciting parts of being part of an M&A? I know Haley, you mentioned that you sold your company very quickly, 10 days. What are the exciting things to look out for?
Well, I mean, there's a lot of excitement in there. Like for a founder that's been building their business, no matter if it's a short time towards you've been doing this for a long time, there is an exciting thing to see all of the work come to fruition and to see what's possible, what's next. And so when you have that strategy, like kind of goes to those strategic objectives you set out. So you're literally getting to like sit on the calls with the buyers and talk about what's possible. So like there's a lot of excitement in like what's possible for the company on the go forward basis. So that's a lot. That happens a lot when you're a founder that's going to stay on. And so you're really thinking about like what's possible. What are we going to be able to do together? What are the next things? Like, so here's ideas of what I've always wanted to do as an independent company that we haven't been able to do because we've been laser focused on meeting existing customer needs. But like, what's possible? Could we go into an international market? Could we like move into this space? And what resources would you need? So there's a lot of thinking during an M&A of what's next, what's that strategic plan. It's also really exciting when you're the seller and you're like, get to see all this come to fruition and you get to see how, like, you get to share all this excitement with your shareholders who invested in your company and brought along and believed it. From the buy side, it's super exciting to like meet. I love meeting founders. I love hearing their stories. I love thinking about why this is a good strategic fit. And I love painting the picture for founders of what is going to be possible now that these things came together. So if you took look at what just thinking about the reach of this product, if we like add this into it, if you had access to this data, like this is what the customers would experience. And so there's a lot of excitement around that and like what's possible that like helps you get through like where you're going through some of the diligence or you're like arguing about like a defined term. Like, I mean, I've had many late nights where we're arguing over like the most random thing and every deal is different. And the sticking point is always like something that you did not expect. And, but like, it is really exciting to think about what the customers are going to think and how this is going to move forward and what the possibilities are. And then there is like when you're the seller, there's the excitement of like, wow, I get to see the financial reward for all of the hard work that we've put in. So it's exciting. And then when you know that some of your employees are going to just have like your employees are going to have more opportunities, that
Hmm.
your customers are going to get to see more exciting things that you always wanted to do for them. That I think is that gets you through some of the less exciting diligence and tiny like nitty gritty deal points.
Yeah, definitely. My last question, do you have any other advice, as we look out at the landscape of M&A? Do you have any final thoughts for any founders out there?
I think it's really just understand what's really important to you.
Mhm.
Like you don't have like look, sometimes if you're a seller and you get a lot of inbound interest, whether it's from a PE firm or whether it's from a strategic, just make sure you understand what's important to you because
Mhm.
like deals like don't work like clockwork. The process can take a while.
Mhm.
So it's make sure you understand what you want to get out of it, what your goals are so that you kind of go into a process, both sides, with like that North Star of what's possible. I think getting technology involved, there's a lot of technology that's available that can help with these deal processes that can really orient you and actually help you see like where are we in this process?
Mhm.
Have we addressed all the key points? And so I think it's really good to just really understand like what the process is going to look like. Collaborate with the both sides to understand like how are we going to approach this, like what's like and how are we going to move forward so that everyone is kind of on the same page. But I think it's to know that it's like there will always be things that will jump up that you didn't expect, that you'll always be asked for more diligence than you thought that you would need to share, and that's okay. It's not because someone doesn't want to do the deal or they're getting cold feet. It's just like sometimes on the buy side, we have certain boxes we have to check in
Mhm.
order to get the financing to fund it. And there are things we need to know. And on the buy side, like the sell side is doing the best they can. They're trying to run their business. They are literally managing a business and an entire process, and they can only involve so many people. And so having that patience and grace while people try to move as quickly as they can. So it's just understanding that it is a process, and that if it doesn't work at the end, if you get close and it's like there's something that comes up on either side that makes you feel like I need to walk away from this, even when you put a lot of money in it, even when you put in a lot of time and you put in a lot of people hours, that sometimes the answer is that no deal is the best deal. And so you just need to know that like there's no, you have to have that North Star of what's important to you and what you need to see out of it, because at the end, once the deal's done, it's done. And you're not unwinding it. And so if you haven't focused on what's important to you, you may, you want to be excited at the end of the day. Like you want to be excited about what happened and where you got.
Great. Thank you. That's such good advice. So we looked ahead. Now let's take a step back and think about Vanessa with legal operations. What does it look like in the past and where do you see it going in the future?
Well, I think, where legal operations is concerned, what it looked like in the past was the GC or the legal department probably relied on a paralegal or some other paraprofessional to do things within the department, perhaps help with the technology or to create a process or to create a playbook or something like that. Maybe even help with the billing. And I think that what evolved out of that is that GCs and the leadership in the legal department started to say, hey, we really need someone to kind of corral all of these things that we're doing that are not lawyering and is not, being a paralegal or an administrative professional, but someone who helps in the operations realm to help the department operate better and function, optimize the processes, scale whatever it is we're trying to do. And so I think, it kind of evolved out of that the GC started to say, I need more of a, fixer, if you will. I need someone that is going to come in and be a liaison to the business. So I need someone who's going to liaise with IT and liaise with the revenue or liaise with the the billing department so that I don't have to do those things. I can focus on the things that I can focus on. I need someone to get me metrics so that I can tell a story. And I think that's part of how it evolved. And it kind of organically that way. But now that it has a home, right? Because I saw myself in that position where my hands were over here. I was a liaison over here. I had my hands in all of these different areas in the legal department because I was the legal liaison to IT and to the finance department and to the HR and so it kind of evolved from all of that. And I think that um, where we're going with that, now that it has a home, that GCs and some of them don't really know what it is they need until they get that person in that has those capabilities and can do those things. And then they're like, yes, this is what I need. It depends on the size of the excuse me, the size of the organization, the type of organization it is. So it's not like, one size fits all when it comes to legal operations, because a larger organization may need all of this for legal operations. The legal liaison, perhaps as chief of staff, they might need the technology, they might need, all of these things. But then on a smaller scale, when it's just perhaps it's just you and the GC, or you and a small legal team of 4 or 5 attorneys, maybe a few paralegals, that the responsibilities can be different from organization to organization. And that's really the wonderful thing about legal ops.
Yeah, absolutely. And in terms of, really, I know you mentioned you're kind of a fixer. How do you build those processes so that everybody is on the same page?
Well, I think the first thing, you have to be strategic, right? And you have to, take a step back and, in my opinion, like, do nothing at first in terms of implementing or creating or anything. And the most important thing, I think, is to talk to the people in the department. What is it? What do you spend your day doing? What are your challenges? What would you like to see change? And kind of get a survey of those people whose lives you're going to change, right?
Mhm.
And so once you can do that, then you can identify those opportunities in the department, and then focus on creating the process around there. Sometimes there's a process that already exists, but it might be broken or fragmented. And so as the fixer, I would come in and say, okay, well, here's where it's fragmented. How do we bridge that?
Mhm.
Here's where, maybe we have 5 different technologies that we're using, and none of them are integrated. And so we have all these silos. Oh, I have to go over here. Oh, I have to go over here. Well, maybe you can integrate those and have it seamless from end to end, so that even though you might be working with more than one platform, the information is shared between the platforms, and the information is more readily accessible, and it's also sustainable for the business, because, as you know, when you're working with silos, all you need to do is lose that one person, right, that operated that silo, and now the whole business is like, okay, well, who did this? Oh, well, so and so did this all the time. Now, now we have to figure out what it was, because it wasn't integrated and the information wasn't shared.
Yep. Yeah, absolutely. And I know when we were preparing for this webinar, you talked a lot about what story is the legal team telling? How do you help tell that story within the organization and externally?
Well, first of all, I'd like to say that you have to dig deeper, right? That on the surface, it just may be numbers, right? In the metrics. Sometimes there may not be any metrics, but sometimes
Mhm.
the metrics is just numbers. So, whereas it relates to contracts, for example, the metrics may be contracts in, contracts out. Well, what does that really tell you? Well, it tells you about volume, but it doesn't tell you about the types of contracts. How much time are you spending on each contract? How much time is it in the legal department? How much time is it in the counterparties' hands? And what is it that, perhaps if it's a sales contract, the seller is doing to elongate the process? So if you are looking at something like metrics for, the contracts, for example, and you're saying, oh, we did 500 contracts and the average day was 6 days. Well, was it? Because perhaps legal only had it for a day, and it spent the rest of the time in someone else's hands, or getting more information from the seller. Not only that, where it has to relates to something like billing, legal billing. Oh, well, we spent $1 million on legal fees. Well, what kind of legal fees were they, and how did they, drill down on it to find out where did they go? Like, connect the dots to where that money went, and then you can see, especially if you're talking about doing a cutting exercise, which I've done a few times, you really have to, just not say, oh, we spent $1 million. No, what did you spend the $1 million on? And then take the dotted line to where it ultimately helped or hurt, because it could have been just money out the window and you didn't know it because you're looking at the larger number of the $1 million. So I think that you really have to get a magnifying glass and really look very closely at the things that you're doing, and not just, start at the top and what the end of the story is, but what are the chapters of that story, if you will, that made the end game. And when you can do that, then you can say, oh, well, if it spent 3 days in the legal department, for instance, the contract, maybe we need another resource there, right? But I mean, if it's 1 day, you might say, okay, well, the reason why it takes so long is because it's spending more time with the counterparty, and legal has what it needs. So I think that just when you're telling the story, start at the beginning.
Thank you. I know you talked about, cost cutting exercises. Are there other things that you've done? I know you also talked about fundraising rounds. What else do you do? I know the economy is a little uncertain for people right now. Is there anything that the role of legal ops really helps out with in that regard?
Well, first and foremost, when it comes to cost cutting, is using the technology that you have. Especially if you're, new and joining a company. And a lot of times people want to come in and, put, their stamp on it, and they want to change things and that sort of thing. But once again, and that is something that, I've done at LiveRamp is, I didn't come in and say, oh, we need to get this platform or that platform. I took a good hard look at what it was that we had and started utilizing those things, because it could be that you have a technology that you're only using a small portion of, and you have no idea of all of the capabilities that it can do. And hey, did you know that it could be integrated with this? And now you can, use it on a much bigger level. Maybe you want to do, communicate via Salesforce, which is something that the team wasn't doing before. And they were communicating via email. Well, that's not sustainable for the business. What if you go on vacation or leave or something, and all the communications are an email? Then, by putting all of the communications in one central place, then now if someone leaves, termination, whatever, you can go in and you can pick that up, and it's not a burden on the business that someone is no longer there. So I think that the first thing to do is, especially if you're trying to save money, and companies are in this day and age, to really optimize your use of the things that you have, because you might find that you can use them for more than what you are currently using them for.
Absolutely. Thank you. I want to ask you the same question too about any advice that you would have for any legal operations professionals out there. You've really, like I said, carved out this role for yourself. And I'm interested to hear what you have to give advice to others.
Well, the first thing I'll do is tell you what I like about legal ops, right? And what I like about it is the diversity of responsibilities, the different projects. So, and you're somewhat like a PR person for the legal department, right? Because you are the liaison with the other departments that interact with the legal department, and if you can build relationships, this is a really good arena to be in, because building those relationships with other departments that the legal department interacts with helps when you're doing a project, right? Because you can say, oh, I need to talk to someone about integration. Let me pick up the phone and call so and so, because we built a rapport together, and it's not just a ticket, right? I can hit them up on Slack, and we can have a conversation first, and then we can work with the ticket. So you can tend to get things done easier. The variety of the work, the projects, and you're actually contributing to the success of the legal department. And that is something that I really like, that when it comes to, all of the aspects, when it comes to getting the technology to make people's lives easier, to developing the metrics for the GC to report up to the board, to working with the associate general counsel to do a survey of all of the team to find out what things we might want to change. I mean, there are just so many aspects to legal operations that a person that is involved in legal ops, I think, will probably enjoy it a lot. What my advice would be is, first of all, going back to the comment that I said before, that if you're coming into a new organization, the first thing you probably should do is like nothing in terms of change, and instead investigate and take notes and get to know people and find out what the challenges are and that sort of thing. And then the second thing is that when there is a change or an implementation or a new process or whatever, make sure you manage the change management. And that is, not just on the side of doing the implementation or creating the process, but also the communication to the team early and often, the training that involves. And once you implement it, you're not done. Follow up after that. How are things going? Are there any changes that you'd like to see? What went right and what went wrong? And what can we do to change this? And so it's not something that you just implement or change and then walk away and say, okay, that project is done. No, the project is not done because there are people who are really essentially adopting that process or technology that you need to stay in contact with because it could break. It could no longer serve the need. It could need something more. It could need to be integrated with something, be so many things. So I would say that, as it relates to something like that, that you want to make sure that you not just manage the change, but manage it with the people that are involved. And then third, I'd say that you should keep your ear to the ground of everything that's happening in legal operations. One of the big new things, the shiny new things that people are talking about is AI. And whether or not do we love it? Do we hate it? You want to make sure that it's something that will make a difference in what you do. And you want to make sure that at the end of the day, when you're putting those metrics together, that next new shiny thing that you might be looking at is something that benefits the team and the company.
That's fantastic advice. Thank you, Vanessa. I know we're nearing time and we did have a couple of questions come in. I think the first one actually is for you, Vanessa. You've talked about processes a lot. And the question was, do you build strategic playbooks? And if so, what do those look like?
I do. But the playbook starts with first, I'm a thinker, I'm a dreamer. I'm always thinking about ahead, trying to get ahead of the team, try to get ahead of the GC, try to get ahead of what we're doing. And so I often am, just sitting around, on the weekend or whatever in the evening and thinking about that. And then I meet with our associate GC and we have a real strategic session about the roadmap, what I think the roadmap should be. I get his thoughts on what the roadmap should be. We take a good hard look at where we are, where we've come from. So we go back a year and think about all the things that we've done. We look at where we currently are, and then we look at what we'd like to see for the next year to 18 months, depending on what it is that we're looking at. And so based on that, then we put something together because then we then present it to our general counsel and chief legal officer.
Great. Thank you. And Haley, I think the next one is for you. How do you go about seeing beyond the numbers when it comes to a merger or acquisition?
Yeah, I mean, I think numbers are always important. At the end of the day, everyone's got fiduciary duties to shareholders on both sides of the equation. But that's what I think really comes in about having that strategic plan. What is going to make this acquisition successful? So on the M&A side, on the buy side, we actually would create a post-deal scorecard. What were those things that we hoped to get out of this? And we did it for every deal. And we had specific metrics that we were looking at. And so then we would look at, did we achieve them? So if we aren't achieving those, what was it that kind of held us back? And do we need to be more careful with that, like first 90-day plan of what's important? What areas do we need to focus more on if we aren't hitting our go forward revenue goals? Like, do we need to be more like where do we need to be more intentional? So I think it's really understanding what your strategic goals are and being and writing it down, like, so that you can make sure that you're focusing on those key next steps.
Awesome. Thank you. I think that's all we have time for today, but if we didn't get to your question, we will follow up with you. And I want to thank you all for joining. I really want to thank Haley and Vanessa too for joining and giving us such great insight into everything, really the landscape that is to come for the quarter and for 2023. We put on webinars monthly, and if you go to linksquares.com/events, you'll find them all there. So we hope to see you on another one. Thank you all so much.
Thank you.